evening to all the viewers who've tuned in to this live broadcast. This is Daily Finance Wrap. It's your daily dose of personal finance updates covering investments, insurance, loan, real estate, everything to do about your money. And of course, we bring in the experts to do the analysis. We'll also take your viewers' questions and queries, so please keep commenting and send us your questions on the YouTube live there, the box at the side of your screen. I'm your host, Stacey Pereira, and let me take you through all the top news stories of the day. Well, it was another volatile session on Dalal Street after we saw that bloodbath that we saw all through last week. But the positive cues were just limited to this morning, where we did see the markets then come ahead and reverse all of those gains by the end of the trading session. The Sensex managed to stay above that 80,000 levels, but did end in the red. We also saw the Nifty shutting shop around 24,100 odd levels. Among your gainers, you did have Britannia, Asian Paints, Shriram Finance, Bharat Electronics, as also the IT stocks that were quite a buzz. Infosys and Wipro, they're among your top gainers. Whereas on the flip side, you did see Adani Enterprise, Adani Ports, Ultratech Cement, Sun Pharma, and Bajaj Auto among the laggards in trade. And moving on to other stocks that were abuzz in today's session, of course, the Adani Group continues to be in the limelight. We had Adani Green Energy shares drop for another 7% today, marking it as the sixth consecutive day of losses for the Adani Green Energy stock per se. They went on to issue a clarification to stock exchanges, assuring that there would be no significant impact on their operations or further growth plans, as there was no new financial commitments currently under consideration. That too with Total Energies. Now remember, Total Energies holds a 19.75% stake in Adani Green Energy, and they went on to declare that they would not be making any additional financial investments in the Adani group of companies until these acquisitions against certain Adani group individuals and their potential repercussions were fully clarified. Remember, on November 21st is when the Adani Green Energy company went on to disclose that the US Department of Justice, or DOJ, as well as the Securities Exchange Commission, had taken legal action against some of the key figures in the company. Moving on then to another share that was quite a buzz in today's trade, then that has to do with Vodafone Idea. These shares surged as much as 17% in trade today, reaching an intraday high of 8.23 rupees per share. Now remember, this sharp increase in the share price is on the back of the Union Cabinet's decision to go ahead and approve a waiver of the bank guarantees for telecom companies. Now, this move is aimed at reducing the financial strain on the industry as a whole, but also previously the Department of Telecom had recommended a change in this kind of after the industry had called for support. Remember, the telecom companies have requested that they need these bank guarantee requirements related to the spectrum acquisition that were made before 2022, that be removed altogether, citing that they will need this kind of financial relief. And the government has held true and said that there will be some bit of waiver when it comes to these bank guarantees. Vodafone clearly, jumping on the back of that news. And to do with more cabinet approvals, we did see the cabinet go ahead and approve the PAN 2.0. Now, this is a new way of how you're going to be using your PAN card from year ahead. The whole PAN 2.0 project was a major initiative to modernize how the permanent account number or permanent account system works altogether. The goal of PAN 2.0 is to turn PAN into a common business identifier for all your digital platforms across government agencies, and this will simplify pretty much your taxpayers' registrations as well as the verification process. Now, the Cabinet Committee on Economic Affairs has sanctioned the project, and with a budget of about 1,435 crore rupees. Now, PAN 2.0 is set to integrate PAN as well as TAN, that is your tax deduction and collection account number, as well as TIN, that is your taxpayer's identification number, into a single identifier. Now, this whole integration will allow businesses as well as individuals to use just one common ID across various government systems, reducing the administrative complexities as well as boosting of efficiency when it comes to dealing with businesses and individuals going ahead to pay their taxes. And moving across to overseas and what's happening there, we did have a President elect Donald Trump announce his plans of increasing tariffs on all Chinese imports into the United States by an additional 10%. Now, this he did go on to post on his social media platform Truth, and he also made an announcement regarding how there would his first execution order come January 20th when he takes charge would also go on to enforce a 25% tariff on all goods from Mexico as well as Canada, not just China alone. This will effectively end the regional free trade agreement that the United States has with these countries. Trump will be sworn in on January 20th, and with the new tariffs, these are pretty much aimed at tackling illegal immigration as well as the drug trade, is what he went on to post. Well, those were some of the top stories of the day from the markets as well as the corporate world. But let's get going and understand what the whole fuss is about. FIRE. That's right, financial independence, retire early. You probably have come across this term quite often on social media, and it's become a money management mantra of sorts that people nowadays are, getting used to. But how does one really come to achieve it? What does it take? You keep hearing planners and influencers go ahead and talk about the FIRE strategy. What exactly are they talking about? Now, it is defined by something like, a lot of frugality, also extreme savings and investments. Now, the goal, of course, is to have enough wealth to live without actively working. But is it that easy? How does one go about calculating what your FIRE number is? Is there a strategy? And in today's day and age, when you have so much of uncertainty regarding market environment as well as inflation that is only increasing, how is this really achievable? Let's try and answer some of those questions. And joining me now for that is Ritesh Sheth. He's a chartered wealth manager at Tejas Investor Services. Welcome to the show, Ritesh. Well, we've spoken so much and we've got a gist of what exactly this FIRE concept is. Of course, just for our viewers' knowledge, this was first conceptualized in a book back in 1992 called Your Money, Your Life, which was written by Vicky Robin. And since then, there have been many books and many ways that this has been adopted and people, talking about it. I think post the pandemic, when people started working from home, it became quite a mantra saying that, people actually see themselves retiring early, and this is something that can happen. Just help our viewers understand this concept in layman's term, and does it really mean instead of retiring when you're 60, one can do it at like 40 or 45, and what does it take?
Thank you for inviting me, ma'am. See, this is regarding when we talk about FIRE. FIRE is actually a aggressive investment strategy, which normally say that in a traditional way we retired at 60. Now, if I want to retire at 45, what will be the strategy I should use, or what should be the income stream I should have to fulfill my retirement at 45? That's very simple in a term, and one can really look at making it possible by understanding the basic concepts of it. It's very simple.
Right. So it is a simple concept. You are talking about, a really aggressive investing and also quite a bit of savings that is required to go about this. But if you have to simply put it, what does it really take? Now, there are some people that say that, this actually means saving almost 50 to 75% of your yearly income to arrive at this FIRE number, which could also be calculated at that 25 times rule. Just simplify that for us, and what exactly is this 25 times rule or that 4% rule that proponents of FIRE really try to stick by?
So let's count the FIRE number. Let's say I want to retire. Say it's simple to that key. Whatever is your goal or probably your expenses. Let's say, for example, sake your expenses of 5 lakh rupees on an annual basis, and you want to achieve that number. Then you just multiply it by 25. So it will be 1 crore 25 lakh rupees, which is required to achieve your financial independence, or you call it as an retirement target. That's what it requires. That's very easy to count. So whatever is your monthly or a yearly income multiply by 25 time, and that's what you get. So so it's 1.25 crore which is required for your retirement. Hello.
Can you hear me?
Yeah, I can.
Yeah. So we've arrived at this 1.25, the 1.25 crore number. How does one break that down into your daily savings? We've already made the account of 5 lakhs as your expense, but we are also looking at this through the course of 5 years, and you need to also take into account inflation. So how does one then do the math to come back to a daily number as to saving? How much is supposed to then be your monthly savings?
So yeah, so let's put it this way, that you want to retire down the line 10 years from now, and you already have a target of achieving 1 crore 25 lakh rupees as your retirement corpus. Now, to achieve that in 10 years, you just simply divide it by 120 months. So it will reach to 1,04,167 rupees, which you need to save up every month to reach your retirement target by end of 10 years.
Right. But
Now, coming to that, here when we talk about 1,04,167 rupees as a precise number, your portfolio should have diversification across different asset classes. It's not just equities, or it's just not bonds, or probably government securities, or FDs, or mutual funds. You should have different asset classes to justify your number, and you should have all that asset classes in your basket to fulfill your retirement, or you achieve your fire.
right. So, is there an ideal portfolio that one could be looking at, or if one wants to start building this fire fund? What all should be part of the portfolio? Should there be things like real estate, which is again, really big investments? So, how does one, come down to choosing what should be part of their portfolio then?
Uh, First, let me explain that how or what exactly we require to create that. So first, I will always say to people, like, you should have an emergency fund of 3 to 6 months. That should be the first criteria when we bifurcate our for money to particular allocation. And after that, we need a historically, let's say, inflation. Now when we look at inflation, we normally look at inflation, and we always say that markets normally stay down, or a crisis times are there. Now at that point of time, one should really look for investing into ETFs, where you have gold ETFs, you have real estate REITs, which are going to support you, because that downside or a protective side will be less on, maybe the equity side will be on a higher risk. So probably you should balance out your portfolio by investing into gold or real estate for some time. For a liquidity purpose, you should have REITs. That's how I look at it.
Right. So, Bill, so before getting into saving up for this for fire, should you then make it imperative that you have these emergency funds kept aside? You have an insurance policy. What about children's educations? Those all, can money from this fund be used for these purposes, or that is separate, and then you have to then go ahead and also keep in money for this? And how will that
So,
really work? Because that's quite, these
the
are bigger
basically
spendings.
sorry basically, when we look at the numbers, it's only retirement we are talking about. It's an aggressive retirement plan. Okay. But if we look at the flexibility of investing, is you can use the same strategy on your children's education. You can use the same strategy on your, you can add up all that numbers and an expense. Let's say, when I call it, I need a 5 lakh rupees annually, so it comprises of all that what I require. right? So it's not like only I required some funds at it's just my basic expense. It has all that component added to. So probably one should count on that numbers on a futuristic basis, and they should decide on what kind of a target they want to achieve. Let's say today if I have a plan to invest into, let's say my retirement is 1.25 crore, and probably I have a kid whose education is still there, and he need to complete his higher education, his marriage, then my own upgrade of house. A lot of things are already there in mind, but if I want to really go and reach to that all different goals, I need to add up that numbers, whatever is my future numbers, what I'm expecting to spend into my fire number, and I should build that asset along with that, so that flexibility we can build our with the retirement fund also.
Right. So that 1 lakh 4,000 number that you had come up with, it would need much more than that over time,
Yeah,
of course, when you're
definitely,
considering
definitely. Because see that 125, 1.25, the 1 crore 25 lakh is just for my retirement when I'm saying I need a 5 lakh rupees expenses on a yearly basis, right? Now, let's say I spend more over some expenses are added, like say 1 lakh rupees more is added to my 5 lakh annual expense,
Hmm.
then that number will definitely change. That will change to 150, right? So that number and that dynamism is always available as an, you need to checklist on your fire number every year, and you should review your portfolio, you should review your investment strategies and change accordingly the way the spending changes.
Right. So your spending could change. You also have inflation. You also have market uncertainties that will, come into the picture. But some would just simply give up thinking, kaha 1.5 lakh per month, when, there's hardly that much you will be able to save, plus do all your, daily expenses and the rest. Is it really realistic to have these kind of goals, and is it achievable? Do people in their early, if they're thinking of retiring by 40, is it something that they could achieve? And does that mean that your current lifestyle needs to take drastic changes? That means that, if I want that lavish holiday when I'm 40 or 45, I don't get to take the vacations today.
No, it's not like that. See, basically, a fire is a strategy which helps you aggressively invest. Okay. So basically, my idea always to my customer or to anybody who want my consulting, I normally say that save up is the best vehicle first. Then it comes to savings. So when we save, it's already there in my kitty. And now when you said ki that 5 lakh is a hard to achieve, I believe when I counted on the 5 lakh number is on a standard average income. Now, probably people have lesser income, then their needs will be also less. So, let's say a guy who earns 20K a month, so his yearly need will be 240. So, his target of fire will be also less, almost 50% of it. And that keep on, let's say today he's earning 20. 5 years later, his earning will be 50, and it keeps on changing with inflation. Income also grows, right? So on an average I have seen that the average salary or income grows by 5 to 7% on an annual basis. Probably you may see that income doesn't grow for 2 3 years because of the industry, because of the sectors, but on an average the salaries have mostly grown to that number. So probably that revision of portfolio, relook to the portfolio, relook to your strategies is very important when you plan for your investments. Second is when you say ki I can't do vacation, I can't do my luxury spending, or I can't do anything. That's not true. uh, First is you need to rigorously invest. If you have that target in mind ki, yeah, this is what I needed, automatically the saving starts. Let's give one small example on it. Like just I just got an idea of it. Like say I have a wallet which I usually carry, and I have that habit of keeping some emergency fund in my wallet, that if something goes wrong, I should have that one note of 500 or 100, whatever. I keep it aside into my pocket somewhere hidden. So
Hmm.
that fund is anyways available to me to use, right? So same way, that emergency fund I have created in my wallet, same way I have to create in my bank, my investment account. Second, it comes to savings. So when we do savings, we should have some funds like 3 to 6 months of my emergency fund, which may help me achieving my goals on a time. Then third one is long term investments, which is more or towards inclined towards a retirement plan, which I have already started doing it. So somewhere I need to pump in more money to the retirement, and retirement is a basic requirement. Let's say I retired at 45, my average life expectancy in the country is 80 plus,
Okay.
right? So if life expectancy is 80, so I should have such kind of a funds to take care of me till I leave, right?
Hmm.
So that's where the strategy, the fundamentals, or products what we buy, we need to carefully look into that products. We need to check on every time, and checklist on what I'm buying, what I'm doing. uh, am I doing the right strategy at the right time? So that checklist is more important rather than just saving money.
Right. For the benefit of our viewers, also tell us a little more about the different types of these fire strategies. You did mention for different people and different individuals on the capacity of how much they earn, they will be making different kind of savings and investments. So there is a strategy, a different kind of strategies even when it comes to fire and how you want to plan for it. So if you could just throw some light on what these are.
Simply, there are three types. It's like an aggressive, moderative, and conservative in a simplest way, I can say. But in our terms, if I want to put, then we have a lean fire. So lean fire is like a live up to your means, and you try to save up more and more and more money, so that you basically leave like a bit of, in a Hindi we can call it a kanjusi wala life. But
Mhm.
yeah, it's not compromising, but yeah, it's a kanjusi wala life. Then that will make you a lean fire strategy. Then it comes to fat fire. So fat fire is a mostly, it's a relaxed one where you can just kind of, it's a moderative mind. So probably uh, savings, investing aggressively, doing some bit of spending, all that. It will be a bit slower than the lean ones, but yeah, that also will reach you at your right destination. Then
Right.
we have a cost. So cost is something where when we say, okay, I will just count my returns what I have generated. So whatever savings and investment I have done over the time, I have actually seen that my target to that number has achieved bit earlier. Let's say I'm able to generate some higher returns than the average. Then probably I will slow down on my retirement, and probably I will have that fund before my target year. So that's a cost fire way. So cost fire way is a very conservative and very slow moving stuff. When, because say initially you started investing aggressively,
Mhm.
you pump in money to more focus portfolios like equities, or probably sectorial shifts and all that. You're able to generate, let's assume, 14% return on that particular segment. And now, because while counting your future values, we normally say ki 6 to 7% is the ideal number to count, because we are counting the future numbers. And aggressive side, we say 10%. Still, when we have that numbers in mind, uh, if I want to achieve that numbers, and I am able to generate that return bit earlier, then in future my investments will be lesser. That is cost fire. So these are the simplest three way of looking into strategies, which will make sense for people to make strategies as per their requirements.
Right.
I
Ritesh,
would
this,
like, add here that when people say that they want to have the fire strategies for their portfolio, please consider health insurance and life insurance as your expenses, not as your investment or a product. Because when we plan for a fire, normally it counts for your wealth. But if I'm not healthy enough to reach there, what is the use of that asset? So if I have an health insurance or a term, because say today I don't know my day of going out of this world or probably death, if something goes wrong with me, the whole family is on toes and they are not able to fulfill what I think that they should have or my family should own. So for that reason, I always say that health insurance is required, as if I get ill or my family member gets ill, my money which is planned for something should not get affected. Then I have a term policy or a life insurance policy which will take care of me over my death to my family. So that goal what I have set it for mine, because it always a family, right? So it's not only me who want to retire, it's my family is going to retire, me, my spouse. So that's how I take it, my investment into consideration, that if I am retiring, so my wife is also retiring, and I should have that kind of a fund available for both.
Absolutely. So that is important to know that before you get into, your fire planning, you should also have your insurance and all of that kept in, and not look at that as an investment, because those are things that you would need no matter what. Let's also get answering a couple of queries that are showing up on our feed. Preetam Das is asking, I'm 34, and whether the fire concept is applicable to him. If he starts planning now, he wants to know how soon could he retire. How is he supposed to be making that calculation? Obviously, he's not given us more details about what kind of money he's earning. But for somebody who's 34 and wants to aggressively save as well as invest, how will the fire concept work for them?
Simply saying that in fire concept, as an investment strategy, to I'm not counting the expenses because I don't know his income, I don't know what he's spending on. But if I count on only the saving side of it, then he should at least have 25% of his total earning on a monthly basis saved, and divided into short term, long term,
Hmm.
and he should plan. Now for him it is definitely doable, 35 for age. And if I have already given example of 45, so probably he's eligible for going with the fire. Only thing is he need to connect with right advice and right product to buy.
Right. Nidhi Singh is also writing. She's saying that she's just 21 years old with an annual salary of about 8 lakhs. How should she go about planning her savings if she wants to retire by 40? So that gives her quite a few years, in fact, to also get there, because she's just 21.
So she's 21, so we have another 19 years to go. And if I have a 19 years to go, and if I count on my fire calculator, and she's earning around 8, and if I assume that she's spending around 4.5 lakhs, so initially I said that whatever is your expense, that I am counting on my needs. So I'm assuming that she's spending 50% of it. So here it applies 50/30/20 rule. So
Hmm.
50 is my expenses. Out of my 8 lakh, 4 lakh is my expense. So again, my calculation, what I have done on a generic way, is near to her number, and that target is achievable. And maybe she can retire 5 years early. So, sorry, 4 years early than what she's thinking of retiring at. So if she do a strict following up on her investment strategies, definitely she can retire much earlier than 40. I think 36 will be her age, and if she just go with a safe, good strategy to go with.
Right. In fact, that's very good news for Nidhi. She actually has that much time on her hand and can get going with this aggressive strategy. Now, one of the common criticisms that fire advocates also face is that, there is this people say that, I've retired already by the time I'm 40, but they do have another source of income, or, a passive source of income. Now, this could be via the investments they've made, maybe a rental yield. But when people say that I have already quit, most of them would say no, you do have an income coming in. So how does one balance that? Is it necessary that you need to have this second source or a dual source of income once you give up your 9 to 5 perhaps?
No, I'll not agree to that. I required an additional income. Basically, when you count on your numbers are already counted with your current source of income. Now, if you have any other source of income, it's good that you have some other source of income which is adding to your fire numbers. Probably if I put it on the right way, let's say I have a one ancestor property and which is fetching me say a 10,000 rupees rent. Now that is an additional passive income which is coming to me, which is there always in my kitty. Now, if I have that 10,000 rupees in my kitty, it's added to my income stream. And when I have that income stream added with 10,000, so probably when I count on my retiring or probably I'm planning to retire, I can reconsider that number and think of, retiring, or probably I have more corpus to spend.
Right. Well, that pretty much simplifies what this fire concept is. That is, people are getting really excited about. We are talking about saving aggressively. We are talking about financial independence that it tries to give us, the freedom to choose between your career then or how you manage to save up enough or have that corpus kept there that allows you to retire early. But remember, this is a method to get you to that, but you'll have to keep going back, checking that fire number, looking at your investments, making those changes, because that is something that you'll have to do on an individual level. It's not this one formula that we've been showing out there that will work for all. So it could be different for different people. And of course, you have to keep in mind the externalities, any kind of emergencies, health or otherwise, that one needs to be planning for as well. So definitely the fire concept is something that people could look at, but we'll have to have that caveat of how it really works and where it works. Let me thank Mr. Ritesh Sheth so much
Thank you.
for giving us his time, helping us understand this concept, and also breaking it down, making it simpler for our viewers to understand. Thanks so much, Mr. Seth, and we look forward to speaking with you sometime soon.
Sure. Thank you. Thank you,
With
everyone.
that, it's a wrap and end of this edition of Daily Finance Wrap. Many thanks for all of viewers who've tuned in. You can stay tuned to Personal Finance TV for more such updates.